Hey everyone, welcome back here. I'm Uliye Misi Dada with Money Gist Top 5. In its push to control inflation and keep liquidity in check, the Central Bank of Nigeria has mopped up about 11.43 trillion naira through Treasury Bills in the first 10 months of this year. That's slightly higher than last year's 10.99 trillion naira, showing how active the bank has been in tightening money supply. The massive inflows were driven by investors looking for safe, risk-free options to shield their funds from still high inflation. Remember, Treasury bills are short-term government debt instruments seen as one of the safest bets in the market. Between January and October, the CBN offered to raise 9.3 trillion naira, about a 50% jump from what it offered a year earlier. Interestingly, investor demand was huge, with total subscriptions crossing 30 trillion naira, though slightly lower than last year's figure. Meanwhile, returns on these bills have been trending down. The 91-day paper now pays about 15.3%, while the one-year bill closed October at 16.1%, down from over 20% last year. That's because the CBN has been easing off elevated discount rates amid strong demand and slowing inflation. Nigeria's inflation rate has actually dropped to 18%, its lowest since 2022, helped by a steadier naira and better food supply. Analysts say this trend, alongside a cut in the benchmark interest rate to 27%, could drive a bullish phase in the fixed income market as yields moderate and borrowing costs ease. So while investors keep hunting for safety, the CBN's Treasury Bills drive is shaping up as one of its biggest tools in keeping the economy stable this year. Nigeria's foreign exchange market just had one of its best months in recent times, attracting a massive $5.15 billion inflows for October 2025. According to fresh data from the FMDQ platform, that figure represents a 62% jump from what came in during September, and it's the highest level in 5 months. So what's driving the surge? A big part of it comes from foreign portfolio investors who showed strong interest in the 6 open market operations (OMO) auctions conducted by the Central Bank of Nigeria last month. Together, those auctions pulled in over 7 trillion naira from local banks and foreign investors. Now, those elevated OMO yields are proving too attractive to ignore, pulling in offshore investors and boosting dollar inflows into the market. That extra liquidity even helped the naira strengthen during the month. Breakdown of the data shows that foreign inflows made up about 2/3 of the total, jumping about 90% to $3.32 billion, while domestic inflows also rose nearly 30% thanks to stronger participation from individuals and corporates. However, not all numbers were rosy. Foreign direct investment dropped by around 25%, even though portfolio inflows more than made up for it. Market analysts say the performance reflects renewed investor confidence, better sentiment, and the global tilt toward monetary easing. And looking ahead, they expect these inflows to stay strong, well above last year's average, as Nigeria continues to offer attractive carry trade opportunities. Gold is shining again, hitting its highest level in almost 3 weeks, as investors bet the U.S. Federal Reserve is gearing up for another rate cut next month. The renewed momentum follows optimism that the U.S. government could finally reopen, allowing key economic data to flow again and helping shape the Fed's next move. Analysts say that once spending resumes, more borrowing could follow, and that usually keeps gold attractive as a safe haven. Market watchers are already leaning towards a December rate cut, with some even suggesting it could be a bigger one than expected. And with the U.S. economy showing fresh signs of strain, from job losses to weak consumer confidence, investors are piling back into precious metals. Silver, platinum, and palladium are also gaining, but gold remains the headline act, powered by rate cut hopes and that timeless fear of missing out. Car ownership in Nigeria is getting pricier by the day. This year, the cost of registering a new vehicle has jumped to between 115,000 naira and 140,000 naira, up from 80,000 naira to 105,000 naira last year. The hike reflects rising administrative fees, production costs for licenses and number plates, and even informal charges. Processing a change of ownership is even more expensive, now costing 130,000 naira to 150,000 naira compared to 90,000 to 115,000 naira last year. This process involves multiple steps, including drafting a sale agreement, police reports, court affidavit, vehicle inspection, and reissuing proof of ownership. Some individual costs have also risen sharply. Number plates can officially cost 30,000 naira, but agents often charge up to 50,000 naira. Vehicle licenses now range from 5,000 to 15,000 naira. Roadworthiness certificates are 5,000 to 10,000 naira, and third-party insurance has tripled from 5,000 naira to 15,000 naira. Industry insiders point to inflation, logistics, and even facilitation tips as factors driving the final cost above official rates. For many Nigerians, the rising costs are making vehicle ownership increasingly unaffordable. The Joint Tax Board had announced these increases earlier in the year, citing enhanced security features for number plates and driver licenses as part of the rationale. And unfortunately, as Nigerians know all too well, once prices go up, they rarely come down. Join the conversation and share your experience in the comments. Nigerians are spending billions on gambling every year, yet far fewer are investing in traditional markets like stocks, bonds, or mutual funds. According to the Securities and Exchange Commission, fewer than 3 million Nigerians are active in the capital market, while more than 60 million gamble daily, spending an estimated $5.5 million every single day. That's roughly 14% of the government's budget for this year. The problem? Many Nigerians don't trust or can't easily access the formal investment channels. Gambling promises quick money, and it's just a tap away on mobile apps, often backed by flashy ads, sign-up bonuses, and promises of huge wins. Meanwhile, poverty, unemployment, and limited financial literacy push students, housewives, business people, and retirees towards betting and get-rich-quick schemes. Unfortunately, gambling and these schemes come with high losses and addiction, unlike stocks and bonds, which grow wealth steadily over time through dividends, interest, and market gains. Nigeria's capital market participation is less than 4% of adults, and the market capitalization to GDP ratio sits at just 30%, far behind South Africa's 320% or Malaysia's 123%. The message is clear. Nigerians need accessible, trustworthy investment options and better financial education. To change this trend, regulators and operators are focusing on nationwide financial literacy programs, stronger market protections, and policies that encourage youth participation. This is to channel the nation's appetite for risk into productive, wealth-building investment. And that's Money Gist Top 5 at this time. Do like, share, and subscribe to this channel for more insight into Nigerian business, finance, and investment trends. I'm Mops. See you in the next video.